1 second, real quick. Okay. Dope, and the tweet sent out. Awesome, guys. Welcome back to the stream. As the title suggests, we are updating. We're updating our match model. I was supposed to do it last night, but unfortunately, lack of internet will cause you not to live stream. Surprise, surprise. Made some updates to the stream, as you can see right over in this area. We have a little Spotify thing, so you guys can see what songs I'm listening to. If you guys like this, let me know. If you guys don't like it, let me know. So Match.com. First thing we're going to do, of course, is use our nice Atom Finance link, which I will go and share with you guys in the chat, in the description of the YouTube video, all of that good stuff. So you guys can go and find it. A lot of fun upgrades I've done to the stream recently. So Match.com, let's update our price. Dope. And let's continue on by just starting off with let's start off by just going through some of the data for our, well, first we'll go and do our sub build, and then we'll do rev build, and then we'll go into quarterly data. As always, guys, if you can't see anything on screen, let me know, and I will go and resize it for you. Alright. And of course, half the time, as you guys know, is just dragging over formulas, inputting some new info, and all of that. So we got our, this is the Match.com results that they went and published out, and we're just going to use all the information that we get from here to go and update this. We can actually update the Hinge downloads, because on one of their earnings releases they went and sent out a gorgeous graphic to go and help us out think about Hinge. I had a tweet earlier right when they reported earnings with that image out there, and a plug for you guys. Make sure to follow me on Twitter so you get all this live breaking finance info and other hot takes for finance. And if you guys like talking and all that stuff on Twitch, but want a little bit more casual setting away from our financial modeling, you can join me on Fridays and Saturdays, where I do zombies, Q&A, investment conversations as well. Okay, just adding both the international and North American subs here. Pretty decent growth rates. I mean, considering that there's a global pandemic going on. You know, pretty high teens growth rates in international. Our thesis is kind of still continuing that international becomes more percentage of subs versus North American. Looking here on our expectations too, halfway there, and we're doing pretty well when it comes to how close we are. North American looks like we will be there pretty soon, about another quarter of about 100 more sub growth, pretty much the same sub growth as we saw this year, this week. We will be able to, this quarter, well, and we'll be right up to our estimates. International, still a decent ways away. Tinder, as we got over here, they should have the Tinder subs, or that would have been in the text. Yeah, here it is. Right there, those 6.2 million. So Tinder ARPU, they probably used to disclose this, of course. One of the things I hate about some of their disclosures, they've just gone right out the window for releasing some data. They mentioned that it went down. Direct tender revenue up 15% year over year, driven by sub growth, 2% ARPU decline. So year over year, we'll just put negative 2%. And I don't think we have a year over year comparison. We do not. We could. We could try and give it based off of a previous quarter, but that would be kind of disingenuous. We can go and do those hinge numbers like I mentioned, because over here they gave us, well, there's a match group ARPU. They gave us these download numbers. So first half of 2019 would have been Q2 at what looks to be probably 2.3-ish million. Because if we have, actually, we do have second half, so and that was, we'll just do this as a since they gave us the actual growth in subs, we might as well use the growth in subs. There we go, about 4.3 million users on Hinge, which is staggering. The growth is just absolutely staggering. Growing users 105% per annum, just staggering growth. All right, all of these we will drag over because actually I just thought about how that would be stupid to do right now, because it's pulling from a column that doesn't exist, and the reference will be all weird. Okay, now we can go and do that once again. Tinder subs on our guesstimation were pretty off. May have to bring that down quite a bunch. Although, just double check that for all these. I remember why I did that, but right now it doesn't make sense. I remember why I did it though. I did it oh shit, now I also remember why I did that too. C28. That's actually off by one. Yeah. So instead of Z, these guys should be AA. Look at that, guys. We are catching our mistakes left and right over here. Now, when we do it, yeah, it's all blanked out. Okay, cool. Cool. There we go, guys. Now we're on track. Okay, going back to our rev build. We, of course, will drag over a whole bunch of formulas. Looking at our North American direct revenue, which is on the next page. Our North American, we got a decent mid-teens year-over-year growth rate. That's awesome. And decent growth international. You're starting to see the picture too that international was a lot harder hit than US was when it comes to the pandemic and the impact on Match.com. Also, some of this, what's going to be interesting is this is also this is the first quarter that we have Tinder's direct revenue grew 15% year over year. This is also the first quarterly financial statements that are their own independent financial statements. So, of course, they spun out from IAC. And so now they're reporting for the first time their own financials. So the balance sheet will be significantly altered based on the arrangements that they made with IAC. So that is something that we are going to have to pay attention for. Because I did get some decent amount of debt. We have keeping up with the trend, international ARPU declining, and of course them doing worse than the US did in the pandemic, with actually North American ARPU just impressive here with 65 cents, almost double-digit increase year over year during the pandemic. It's just some of the operating metrics coming out of this company are just absolutely staggering. That got off. It should be 58. So flat year over year ARPU. We will go up here. I'm going to give us cost of revenue. Of course, in the old way that they did this, they did give us total EBITDA, which was 41% EBITDA margin. Fantastic, just fantastic. EBIT, we will have to kind of calculate. Actually, we won't have to calculate because when we scroll down for the financials, we have it. There we go. Pretty decent EBITDA margins right there. Pretty much in line with what they were last year. And cost of rev. Still maintain those strong over 70% gross margins. So far, very good looking quarter. Because we have pretty decent revenue growth. Top line growing over 11%. North America doing spectacular. International doing less so, but hey, you would have thought that they would have had a way worse impact on because of all the pandemic stuff. So to go and see these numbers, especially some of the ARPU numbers in North America and just the user growth metrics as well, is just staggering. So let's go and update our quarterly financials here. I just realized I should have done all of this stuff. I should have set this up before the stream like I normally do. My apologies. We're not going to go nearly as fast as normal. I just want to scroll down real quick just to see. All that will change, of course. Hopefully everyone out there, whenever you're watching this, if you're on YouTube, having a good night and good morning. And everyone out there on Twitch, hopefully you guys are having a great night as well. It's actually funny because I'm just going to go through and, of course, delete all of this. So that's all old data. We got apologies here, guys. And of course, those of you that are not up to speed on Match.com and our model, you can go in on Twitch and on YouTube. Go and watch our entire model build of Match.com that we did. It was actually our first model build that we ever did on the channel, so I'm actually incredibly excited to do this one because it's kind of going full circle a little bit. Because you guys now get to experience what I do, which is every quarter update the models I build and all that stuff like that, and we get to do it together on the model that we built together, so pretty exciting stuff. So just entering in, of course, all of our data here. A little boring, not much to talk about, other than trying to keep an eye on, one, comparing it to, of course, Q2 of 2019, but then also kind of watching the trend. I was using my hands, should be using the mouse there. Watching the trend here of cost, see how our cost rapidly going down, like sales and marketing went down pretty far. So did gen and admin. So just keeping an eye on those kind of EBIT drivers and seeing what effects are there, because so far significant drop downs. Wow. Actually, now that I think about it, okay, no, I'm just looking to see if they changed any if there was any huge changes in financial statements in between, just because they got spun off. But then I remembered also they issued their own financial statements anyways, even when they were part of IAC, so it wouldn't matter anyways. Maybe in SBC we'll find it, but $295. wow, that gen and admin SBC is just huge. That's something that you guys should always pay attention for, is your SBC, especially in these tech names, because if I were just real quick, SBC is a percent of rev. You're talking 4% of rev is just your SBC, which is pretty significant given that gross margins are 73%. So something you need to always pay attention to is that share-based comp. So that's why we do these GAAP and non-GAAP measures of both EBIT and of net income, because you will see, of course, that 4% does make a difference. All right, back to interest expense, which went up significantly as they got a lot of debt was passed on to Match when they spun out of IEC. They paid it in the form of a dividend to IEC in exchange for debt and to spin off and all this stuff like that. It was great if you're an IEC shareholder. It was spectacular. You got your Match shares for free as a dividend. You got a $3 per share dividend. It was great time if you were an IEC shareholder. I must have put something in incorrectly because I'm not getting the right numbers even on EBIT. Let's just go through. This is incorrect as well, so it goes, probably type something in off. Yeah, in fact it was revenue. I screwed up on revenue, but that's why you track all this stuff down, so that when you go and see a discrepancy, you can capture it. And maybe it is you just pressed 4 instead of 5 like I did there, and we're all good on net income and all that stuff like that. So loss and extinguishment of discontinued operations, of course, is all that mix up with IEC, so that has a sharp impact on our net income margin, both GAAP and non-GAAP. And finally, for total diluted shares outstanding, actually share count shrunk so much. So even with that hit to net income because of the loss from discontinued operation and non-controlling and all that stuff like that, still kind of on par with past years. And that takes care of the income statement. Now it's the balance sheet, and I just want to double check. Yeah, they're one of those that do the continuing cash flow statements, and I hate doing those. So we just won't do those. We will go and do free cash flow though. And I may, because of the leverage issue, I may also add in on the debt panel. Normally I don't mess around with debt on my quarterly financial statements. Like I don't normally fill in my panel down here like I do. That actually jumped really well on the full financial statements on the yearlies. Unless events like what's occurring now, where there's a big shift in the balance sheet happens, where Match added on a bunch of debt, so we're probably gonna have that on. Look at the debt to EBITDA metrics, and just keep it updating throughout. And this is what I always talk about when updating your models on these live streams. Quarterly, what I try and look for, especially on the balance sheet, is those big shifts in the balance sheet. How much did current assets change? Of course, for Match, Some of this is due to the IAC spin, and in fact, that reminds me, I should type up here. Just to make sure that I would normally have it as a comment, but they'll also catch my attention too, as a reminder. So when I go through here and I go, well, you know, why is there this wackiness? I also remember that way back, way later when I look back at this model. No right of use assets. Probably from, of course, that IAC spin. It's the theme of the night. Okay. Balance sheet on the asset side checks out. Awesome, so far we're checking out debt. I placed on a decent amount of debt this time, and I think what I'm also going to go and do is update the WAC and all those DCFs to go and reflect this. So I'm going to have it reference, of course, this quarter's financials instead of the yearly financials, because we have had what is, if I were to use just the yearly financials, a doubling in debt, and a significant drop in cash as well, and that needs to be reflected in those EV calculations and throughout the DCF. So continuing on, I mean, that's normally like a choice too. I know some people that don't update their DCFs in that manner. I know some that have it linked to Bloomberg so that they can have it always live fresh. I was looking at something else there on the balance sheet. Common stock. I'm just looking at this redeemable non-controlling interest. Okay, I put it down here the last time, it looks like. So I'll do the same this time. Common stock. Before I forget that. Once again, everyone, thank you so much for watching, tuning in. Hopefully everyone is having a great night here on Twitch. And if you're watching a replay of this, hopefully you're having a good time as well. I know I had someone in my comments of one of my YouTube videos ask me on what was the final part of the model build, what's your price target and all stuff like that, and and I said, I will go and be updating these, of course. So just like now, I'm missing $30,000 somewhere. So yeah, just like now, we will always update our models, and every quarter, hopefully. That's correct. That's correct. was the funnest part. Doing these live is going, where's my fat finger? Where's where I screwed up? Ah, here's where I screwed up. Instead of a 9 there should be a 6, and that clears up our $30 million difference. As I said before, free cash flow I am going to include. That's all the FX changes. And then I will go and do what I said. For EBITDA, we already have it on one of our. We have it on our rev build, so we will just take it from there. Ooh. Use our normal green for our different so that we know that that's from a different sheet. And just drag over, of course, this way. This way we can go and find out our leverage. Will be notes payable plus debt. Bring that all over. We might as well just do interest expense as well. And finally, our leverage. We're just going to do total debt over our EBITDA. We're actually going to go into custom filters here. Because if I remember correctly, I have my little multiple metric there. And we can go and see they went from just debt to EBITDA. Well, maybe I should. Is this doing debt to EBITDA, right? Huge expansion. Of course, that's just a raw calculation. Sometimes the company goes and calculates it differently and all that, so we will go ahead and do what I said we were going to do, which was update all that's from IRR DCF. We're actually going to make this go debt minus cash. Shares outstanding, we'll keep that on the quarterly. I care more about doing making sure all the debt and stuff is correct versus the share count, unless it meaningfully increases or decreases. There's our new debt. Our new cash. And I should probably take this down from 11%. No, just make that easy. Growth stability. I mean, and all that refreshed. Just like with our WAC. That all auto updates. This actually, we can bring this down quite a bit. Was it 5.4% beta? I can go and update that. Oh, that's right, I put Atom Finance on a different window. Of course. Beta NA. We'll do match. And guys, we have so many companies still to go and do. It's just gonna be insane for the next couple of weeks. Normally they have beta on here. There it is, 5.7. So WAC's still just ridiculously low. Price target didn't really change all that much. We still have it at about 18% below what it is currently. Although if you're super aggressive, you can go and use our WAC DCF there. We're gonna go and update our charts. That should be a fun one to go and look at. Yeah, it's gonna give us that nice visual representation of our estimates. Total subs, still a decent gap. There for our expectations. But that will hopefully will close. North America, we look pretty much on track. International, as we talked about, we're a little bit off. A decent sized gap, but overall, slightly our average growth rate so far is a little bit below. Actually, more a little bit in line with it. 22% versus 25%. Total ARPU looks about in line. Same with North American ARPU. In fact, we may have to raise North American ARPU. Gross margins, pretty close. Same with EBITDA margin, EBIT and EBITDA margins. And so far, looking pretty decent in there. Rev build. Let's look at our ARPU there. We're actually right in line with our expectations. And I'll be honest, I was not, the average so far has been about 64 cents. Overall average is 2 cents below where we're at there. And international's been what's driving that weakness down. So I don't know, maybe we increase the growth rate on the North American ARPU just a tad, but we're right up there. So maybe next quarter, if we're below, we increase it, just to go and see what happens there, because we are right in line, but it is kind of we're only halfway through the year, and so there's still a lot of error that could occur between then and now. So let's go and keep it there. I still feel very confident in the majority of our estimates. I'm just looking at the quarters here and all that stuff like that. We seem to be doing pretty in line, like I mentioned on the charts. Margins look to be about right there. Subs looking pretty good. You look to be like bang on. So given the price target, I would maybe say if you're a little bit more on the aggressive side, follow the whack one. This is of course using our combined metrics. Maybe we should update the free cash flow multiple a bit. The IRR DCF. I don't know. We could take down our discount rate a little bit. TV is ending EBITDA at 11 times. It's not that bad. Credit risk premium, competitive risk. In all honesty, we should actually make that a -1. That actually does get us right up to a lot higher of an IRR DCF price target. Pretty much, I would say that's like a hold if you're doing a buy sell hold. Free cash flow multiple, discount multiples. That's also another good thing to go look at right now. Just go and see what metrics out there we gotta go and get to. And now I can also go and look at IEC is kind of a tough one to go and do now. First target free cash flow. I probably did it on that. Although 15 times, let's go and put it up to 20 times and see what that gets us. At about where the stock price is now. Discounted back, $75. Overall, it gets us about right to where stock's currently trading at. So I feel pretty confident with that, actually. Upping the free cash flow multiple, definitely. Let's go. I feel like these are probably still valid, except for IEC. But other than that, guys, updated price target's just a little bit there. And when and got our price target to be about, we're at a hold, right? Our EPS is still below consensus. Our estimates are tracking extremely well. So if you do own the stock, I'd say hold, given the final price target, with the WACC being your upper bound there. And yeah, this was great. Hopefully you guys enjoyed this as much as I did. Always, of course, we do our financial modeling on Mondays and Wednesdays, hopefully. And we do all of our zombies investments Q&A on Fridays and Saturdays. Links to YouTube page, to Twitter, and all that stuff like that can be found in the Twitch profile and as well in the YouTube profile. And I hope to see you guys again.